on life, including a long list of experience there in Europe and Asia. As a subject matter expert in risk management, she embeds risk management into key decision-making process, leveraging agile, data analytics, and also digital approaches. With her expertise in Solvency II and extensive experience in insurance, she's now oversees the strategic risk management across Etiqa within the organization risk appetite and aspiration. We also have Ms. Yip Shin Lee, also known as Shin Lee. She is head of financial risk of Allianz General Insurance Company, as well as acting head of sustainability. She had 10 years of experience in general insurance industry across actuarial strategy and planning, and more recently, risk. So this session will take about 1 hour. The presentation shall take about 40 minutes, followed by Q&A. We hope we have time to answer most of the question. We have received quite a number of pre-event questions, and based on our last experience, we definitely will receive also some during. So what we'll do, we'll try our best to answer all the question, most of the question today. And if we couldn't answer, it will go to the Q&A that we will develop eventually, for the series of this webinar. So participants are welcome to post your question in the chat box. We will also receive, we will discuss some of it if time permits, yeah? So let's begin the webinar. As an overview, Louisa and Shindy will be sharing their experience, practices, and from Etiqa and Allianz from the perspective of risk management. Without further ado, Louisa, Shindy, the floor is yours. Thank you.
Well, good morning, everyone, ladies and gentlemen. Thank you very much for the warming introduction. It is my privilege to be here and to welcome you all. I am Louisa, and I'm really thrilled to be a speaker, speaking with Chin Lee about how to embed, how to deal with climate change in risk management. I will share insights on how to embed climate considerations into our risk management, emphasizing what is really important over there, which is collaboration and practical steps that some can consider successful, others can consider experimental. Join me throughout the next slides, and please raise questions on the chat. I think the slides we have prepared already cover some of the pre-event questions that you kindly have sent to us. However, if you need more specific introductions or clarifications, we are here to provide them to you. Could you please move to the slide number 4? I think no need to go throughout the agenda. I want to allow for enough time at the end for Q&A. So before we delve into the specifics of embedding climate change into risk management, let's just recap on the expectations that are outlined by our regulator, BNM, in the most well-known by now policy document, the CRMSA. So as organizations are operating in an ever-changing climate landscape, it is really vital for us to understand and adapt the evolving risk landscape posed by climate change. So what we are discussing here today and what the regulator also expects is not a unique answer. We will have to continue over the years adapting and taking it on board on a continuous basis. In summary, the regulator expectations for integrated climate change into risk management can be grouped in 3 key points. Number 1, we must recognize the materiality of climate-related risks and integrate them into our enterprise risk management framework and cycle widely, meaning we really need to go throughout all the elements of the enterprise risk management framework. And for material exposures or material risks that are climate risk sensitive, we really need to deploy then enhancements or changes into the framework that will allow us to manage it better. Secondly, and after understanding that step, we really need to make sure that we can invest, or that we invest in data capabilities, in tools, in methodologies, because only by introducing all these elements and supporting then the different assessments, we can effectively manage and report on all these risks. Robust data analysis is really crucial for an informed decision making. We really need to have a way of making the introduction of the climate risks as simple as possible, ensuring that all layers in the organization can understand it, as well as when we relate with our customers and we take the right decisions. Thirdly, climate-related risks should be treated on par with other material risks during the comprehensive risk assessments, to make sure that we identify, measure, and prioritize it accordingly. So active monitoring and timely escalation of related climate risks is crucial for identification of effective actions that mitigate, implementation of risk controls that will proactively address the current and potential impacts, enhancing at the end and as the outcome our resilience towards these risks. Our risk management system needs to be really agile. As also mentioned before, it's a word that we use many times. What do I mean by agile is it has to be adaptable and it has to accommodate the risk considerations to ensure that we understand what is our exposure and we are really putting the right decisions forward. By 2024, BNM urges the developing of risk metrics for effective decision making. Well, these metrics will aid understanding climate risk implications and guide strategic choices. Aligning the risk management with the climate change requirements becomes vital for building resilience and thriving a rapidly changing world. And with this introduction, which is my reading of the policy, I would move to the next slide and focus then on how to do it. We need really to focus on what are the key stakeholders that are also our enablers. And these are really the stakeholders that play the pivotal role in the process. If we start with the left hand side, boards and shareholders, yes, they are the ones that capture our attention on the risk management side, but I also like to prioritize very much the clients. So in terms of the boards, we really need to have a fulfilling of their expectations. They are the ones that will be taking the key decisions. So they really need to be on board. They need to put the tone from the top. And they are also the ones that together then with our interaction on the regulator side and external agents will enable us to understand our clients and identify which are the ones that truly need help and support throughout their transition into a more climate resilient future. Understanding well the needs of the clients, to me, is really a big priority. And I also think that when we are engaging with the different layers of our organization and enabling them to understand well the impact of climate change, it will be very important to involve customers and understand how they can participate together with the organizations in contributing to deal with the climate change challenge, on top of developing then products that are aligned with their needs and their expectations, as well as reviewing our services to support the sustainability goals of all the customers, being it corporate customers or even the retail customers. Then on the right side, we have the regulator and the risk rating agencies. While the regulator seeks a strategic approach which is end-to-end with risk management practices completely embedded. And their expectations include the integration of the climate risk management in a comprehensive manner. They require us to conduct, obviously, scenario analysis, capital assessments, earnings assessments, evolutions, to understand the implications in a financial way and quantitative way, but also on a qualitative manner of climate change. So performing there an appropriate due diligence assessment and adopting a standardized climate change taxonomy is really essential to meet the regulatory expectations, but even to have an impact that really makes sense. So there, we have been all working and we all are acquainted with the CCPT, which is the standardized climate change taxonomy that is adopted in Malaysia. And we are all providing half-yearly reports, and we will be for sure getting it more and more embedded into the risk management practice, all together with internal methodologies that the organizations are also developing and applying. Risk rating agencies, as you may have been already seeing, they have been incorporating sustainability and climate change risk assessment criteria into their frameworks and their approaches. They are coming up with their opinion on the readiness and the preparedness of the different organizations, being the listed ones that obviously have these more visible, but we all to be prepared to demonstrate our resilience and proactive measures to address climate-related risks to maintain a favorable rating and assessment from the external stakeholders. And these should be aligned, obviously, with the goals and the strategy of the organization, including the commitments that have been made or that are to be made in the coming years. Moving to the next slide. There are other enablers and elements that are critical to make all these work. This is not a sole goal from risk management at all. On the contrary, it rather requires a very collaborative effort and an integration across the entire organization of the different elements. I already referred some. So commitments, we need to really, out of understanding what are the impacts, also what is our commitment and how can we contribute. And these should really link with the business strategy and the foundations that each organization is willing to commit for establishing the right foundations for climate risk change. So aligning the business objectives with the sustainability and the climate change goals will then drive an effective risk management. By having that clarified, we can then look at the following elements. We can establish risk appetite statements and assess risk levels. We can then tailor responses from the business that are based on the levels that we have tolerance to take risk, and then ensure that we take also the appropriate management action or even discussion across the organization to mitigate that risk. Obviously, that is completely supported by having a robust governance structure that ensures clear accountability and responsibility towards climate risk. And how do we do that? We started actually last year. We go policy by policy and we start introducing there the different climate risk elements into the various policies. It is a standard and a practice that frameworks and policies should be reviewed every year, maximum every 2 years, and that should ensure consistency in risk management practice across all the functions. So as of the moment we have a commitment, we just need to go policy by policy and start introducing there the climate risk elements. It's not enough. By having it in policies and frameworks, we will not really have the opportunity of making a difference. It needs to be alive and it needs to be operational. So then the only way of doing it is really by embedding the climate change risk management into the operations. How do we do that? We need to integrate climate risk identification and assessment tools every time we develop a product, or even when we are reviewing a product that we already have in the portfolio. The way we take decisions to invest the assets that are backing our liability, we really need also to perform a right assessment and due diligence, have there an approach where we identify what are the assets that make sense to maintain in the future. And then also our internal operations, they need to be enhanced to make sure that all these elements become part of our systems and our processes. And by having all these elements then linked, it will enhance the risk awareness across the organization, and it will for sure make the organizations much more resilient. So once we started doing these discussions, going throughout all these processes, we are then finally able to have the risk controls implemented. And we're going to see that even when we do pricing, we take into consideration the different climate risk considerations or concerns. We start understanding what is the client transition plans, and we start monitoring how aligned they are with the way we want to go. By measuring carbon footprints, we are also able then to monitor and to discuss whether the progress is what we have targeted or not. And these will be all very crucial to make sure that we only keep in the books exposures that will enable us to contribute to a climate change and to educate all the stakeholders and customers around us. Nothing of these is possible if we don't review the system infrastructure. So as I mentioned before, we need to do data analysis. We need to make sure that operations have the data and using the methodologies that enable product risk assessment, client risk assessment, etc. And the only way of achieving these is by reflecting fields that we don't have today on the systems, or even reviewing their particular structures or modules of the system, or even developing new systems that should then be riding on the existing systems. But to really be able to embed all these elements, we need to be able to collect the data, our data, on top of external data, and assess, aggregate climate risks, as well as incorporating then the ESG risk screening elements and scenario analysis tool into the risk management process. And by doing this, we will then be able to cut across all the elements. Moving to the next slide. Just sharing with you where we are and what have we been doing or we target to do, looking at the different considerations and going throughout, the risk management process. In green, actually, we highlight what we have been putting in place across the organization. So we really targeted to go throughout our risk management process, and we have been implementing and deploying elements that were previously not ready to consider the climate change considerations, and they should really take that on board. So on risk identification, you see that we are conducting in-depth risk assessments, including due diligence questionnaires that enable us then to understand better what will be or what is already today the climate risk associated to our exposure, so to our underwriting. And we have been prioritizing and focusing more on the investment side, as well as on specific business lines. That has been our priority. this provides us with valuable insights into the sector-specific vulnerabilities. We do then risk analysis where we identify hazards and primary risk drivers related to climate change. For example, we perform portfolio analysis per sector, and then we go and we drill on the risk type to really look at the physical as well as the transition risks, and try to then derive what additional discussions, actions, controls we need to have in place, or how should we deal with it in a different way. So understanding direct impact from physical risk to protect our organization and check the stakeholders is really critical, and we must do a comprehensive analysis, taking into consideration our operations as well as the third parties that we have involved in our business. This obviously evaluates climate risks from a threat point of view, but also from an opportunity side. And we need to use the risk assessments to then incorporate these on our RCSAs, and making sure that then we get and we gain a deeper understanding on how to manage it together with our different partners and stakeholders. By doing these, we gain all the understanding we need to then move on and do a risk measurement, setting up and the definition of risk mitigations and controls. We use their risk analysis to then make propositions and enable decision-making on climate risks, which then entail different measurements. And I don't hide, I think that there we always need to be practical, and we should start by altering the exposure to certain sectors and regions, develop or design products in a different way, reprice, trying to see how underwriting risks should be taken into consideration by putting there the different perils or even different risks that now we are willing to take. And more importantly, as I mentioned before, as we understand also how the investments get impacted, we really need to make sure that the selection as well as the technical management of the investments is aligned with the risk acceptance criteria and the limits that we have been putting in place, evaluating always regularly whether they are the right limits or not. One of the areas that for us is a key concern and where we work very carefully is on the reinsurance adequacy and the availability of reinsurance. So that is really an area where we really need to work together and partner with the reinsurers, making sure that both are completely aligned and we don't experience moments when strategically one evolves in one direction and the other on a completely different direction. And that is part of the way we have been also developing and reviewing our reinsurance strategy, and the number of exclusions that eventually over the years can come on our direction, making sure that we have there a discussion that takes into consideration the transition plans, and where we are really managing well the third party and implementing a robust business continuity measure that will enhance the resilience of the company. Again, these are all efforts that are only possible if there is open conversation with the reinsurers and with our business, the first line of defense, taking into consideration that there is a time frame and it is not a risk or a threat that is today happening, but for which we need to prepare, and to the extent that we can take action to avoid it from coming on our direction, we can already agree on what are the steps. All this is not possible with having a risk reporting framework well established and in place. So it is critical that then we establish internally in the company as well as externally the reporting framework for climate and ESG. We need to be able to aggregate to make sure that it becomes part of the already established reportings that we have in place. And we need to link it with levels of concentration, exposure thresholds, and different limits. So making sure that it is integrated in our risk appetite is really critical. And only by doing this, again, we can really strengthen the climate resilience, and we can then enable well-informed decisions at all layers in the organization. Giving you concrete ideas of areas that we have been prioritizing on the past years. We actually started, and I think this is important for smaller organizations, we started just leveraging on data, external data that is available, and many times even for free. So we have used UK PRA available information. We have used the Malaysia projected temperature via climate analytics website. And over the past years, we have been performing calibration to estimate the potential climate change impact on our non-life entities. Here we are obviously focusing directly on the physical impact. And we selected the peril in particular. We have been focusing on flood perils. And we look then at the horizons, and we try to then model different return periods for different scenarios and assess what are then the impacts on our direct exposure management, as well as if we have reinsurer, what is the potential changes that we need to consider in the future in terms of our reinsurance treaties and the way we have our structure designed. This is obviously needed for us to build, I would say, the muscle to understand what is the change that is ahead of us, but also to facilitate then the conversations within the management of the company, with the board, as well as with the reinsurers that are partnering with us. I spoke before about risk acceptance criteria. We have been adopting, obviously, practices that have been established at Maybank Group, where risk acceptance criteria have been also defined for climate change and climate risk. And we have been doing the same going throughout all our portfolio, looking then at the sectors and identifying, well, what are domains or areas of concern, with the main goal of promoting the sustainability and identifying even what are different practices and how we can support and ensure that our customers are ready and prepared. But also there, for example, we can set up knock-off criteria on risks that we don't want to take. That needs to be done in a cautious way, because we have there a time frame and we want to see the outcome of the different mitigation actions that are being put in place. So we need this time to make sure that we feel the impact of the transition plans that are ongoing. Maybe on the life side, and also sharing a little bit what have we been doing. Our primary concern, if I put aside the assets, has been to look at the products that we have and do a kind of ESG product risk assessment. We developed a framework where we then identify are these products ESG friendly, or do we have their parts of the design that are not adequate, and how should we review? And this has been, again, an exercise that is done mostly by the business. We just developed a framework and they are the ones that make these alive. It has then implications on systems, because as we decide to launch different products or to review the way we are managing the existing ones or put their different types of elements, we need to make sure that the processes, they follow that from an implementation and operational point of view. As I conclude the sharing, if I move to the next slides and sharing with you transparently where we are, we have a roadmap that we have been developing. Here you have a simplified view on it. It should, in principle, give you a practical idea on how much we have been outlining our initiatives across the years, how we have been carefully identifying plans to be developed, and that then will have to be enhanced over the years. So we do a reevaluation every year of these plans as we conclude each of the years. And as we do that, it will then really get into the business as usual process, and doing that regular review and improvement will ensure that our approaches, they really remain relevant and effective. And as I am sharing these, right, I just would like to make sure that I remember everyone that these are our examples and our sharings. We are not claiming that this is the only way and the right way. We're going to hear Allianz just after. There is nothing that is the only right and perfect. Our collective goal is to contribute to a sustainable future, fostering climate resilience and making a positive impact on climate. And
Lisa,
yes.
If I may ask you on this, like, they're very interesting, you know, as you go through all this risk management architecture, you know, as an risk management practitioner, you know, it just comes straight to my mind, you know, goes to my heart basically. You know, it's really easy to understand, you know, how you move from the structure, then you talk about the process, and earlier to that you talk about the system or the infrastructure that is required in order to make this strategy basically successful. So in the screen right now, you are showing the journey that Etika plan to take for the next few years in implementing the climate risk, and based on each of the risk management process that you have, you are building, you know, specific area year on year. And eventually, you know, this thing, hopefully looking at your plan by 2025 is already embedded into the whole operation. But from this year, last year, as a matter of fact, this year and next year, Etika will focus a lot on capacity building. So what kind of area of capacity building that Etika is currently focusing, that Etika feel that there is a gap that need to be closed or be fulfilled in order to achieve this whatever plan that you have there?
Well, thank you for your question. So as you can see in our roadmap, we started actually in 2021, and we already went throughout 2022. So we could say eventually that we are halfway there. If you know, I try to address your question, it's really important to spend an important amount of time educating everyone. So sharing whatever research we do and analysis that we do. If I look forward from today to tomorrow, right? So we are middle of 2023. What will be really tough is to make sure that we are already with these risk screening and due diligence being done by the business in a comprehensive manner.
It's only the risk management function, the capacity building, but also the general population of the organization?
Yes. So it will be really critical that the first line of defense, they are the ones that are doing the selection of the customers. They are the ones that are passing the message.
You mentioned about the first line of defense, because we receive a lot of questions also asking about how about the role of other line of defense, like for example, the 3.5, then there's a 2.5 and 3, which is the compliance and also the audit. We will reserve that later on. Another thing that I believe this is your last slide, right?
Yes. Yes, it
Yeah.
is.
Yeah. Okay. So in one of your earlier slide also you mentioned one of the important thing is system. Just want to ask a quick question whether based on your experience, should a company to embark on this, should a company buy a specialized a climate risk system, like for example financial risk or investment risk, there is a specific module for that. Is there a specific module for climate risk? However, since you presented the risk management process just now, it seems that it can be part of the existing system that you have. And if, for example, it is part of the existing system that you have, the question would be, climate risk, should it exist as a pillar or a team by itself along with financial risk, insurance risk, operational risk, or is it a category that transverse within all these four teams, the existing teams? A quick one before we go to the next speaker.
So internally, maybe I start from the end of your question. So internally, what we have decided was that it is transversal to all the functions. So we really want climate risk to be an embedded risk. Obviously, there are certain skills that people that do risk underwriting management, they need to build, and they will have to have the climate slogan and expertise with them. On your other question on, is there a particular tool that I can recommend everyone to buy? Again, I mentioned before, this is a journey. So what is happening also from consultants and model owners, they have been changing and they have been creating different tools. So the offer in the market is starting to come across. Big organizations have been simply working on the models that they already have in place and are changing them. That is part of a decision that every single company needs to take on the basis of their complexity and the materiality of the risk.
Okay. So, because of the time, basically, let's move. Very interesting. I keep that, as a rain check because I am particularly interested about the system.
I can understand you.
Yeah. So let's move to the next speaker, which is Shin Lee, to basically cover another interesting aspect of the climate risk management. Shin Lee, to you.
Yeah. Good morning, everyone. I hope you can hear me.
Clear.
Yeah. Thanks, Louisa, for the presentation just now. I think Louisa pretty much covered the high-level process and also very detailed roadmap on how an example of how we could implement a CRMSA. In my presentation, I think I'll go through more of like some examples of how we could integrate this into the risk management cycle. So before I proceed, I also like to add on to what Louisa said. We are not experts in this area and everyone is still learning on this. So if we have time later, we also hope to learn from your experiences if anyone would like to also share during the Q&A. So just to go straight into today's topic. So this is just to share some examples of how to integrate climate risk considerations into the risk management cycle. As you can see, there are 4 areas: identification, measurement, mitigation, reporting, which is what Louisa shared just now as well. And to actuaries or risk managers, I don't think this is new, this cycle. So how do we actually integrate climate risk is probably not so different of how we would consider our key risk in our day-to-day work. It's just that climate risk has a longer term nature and also a more uncertain impact, where every single day there are new developments, whether it's policy or like changes in the climate models and so on and so forth. So I'll just quickly start with identification. So this is talking about identifying climate risk drivers and how they can contribute or impact our existing business. So to make it easier to understand, I'll share examples from both the transition and physical risk aspect. So in terms of identification, one more obvious example could be, for example, policies on carbon emission targets. So if there are policies to regulate carbon-intensive sectors, and this results in investee companies needing to spend a lot more to upgrade their infrastructure or to become more energy efficient, this could pose a credit risk to insurance companies. And in terms of physical risk, the more obvious examples again would be increasing flood occurrences. So this one would increase our property insurance claims cost. So this is where we try to think about what are all the potential risk drivers that could impact our business, and try to put it down. And just to share, for this initiative on transition risk and physical risk, the JC3 subcommittee for risk management has also set out working groups for transition and physical risk, which I believe most of the insurers and Takaful operators were already invited to join. So that could be a platform on how to also identify what are some of the key transition and physical risk drivers for the insurance sector. Moving on to the second part on measurement. So due to the longer term nature and uncertainty of climate risk, sometimes it's very hard to quantify what is the impact of climate risk. And I think this one has also, if we see the articles nowadays, even from actuarial models, a lot of people are saying that if you purely look at it from a quantitative perspective, you are likely to understate the impact of climate change. So this is where qualitative assessment also plays a role. So going straight to the example again on how we could, I give quantitative examples here, but also I'll talk more about the qualitative assessment later. So for transition risk, going back to the policy example, so we could start measuring carbon emissions of our investment portfolio. And for the physical risk, we could start assessing flood exposure, for example, on our average annual loss based on flood models, or we could analyze it by geographical areas depending on the data granularity that you have. And this could all be input into the scenario analysis and also the Bank Negara climate stress test that is upcoming next year. So in this area, I would also like to touch on the potential data and tools, which Riza also mentioned just now. I think depending on the size of the company, if one is there is not I believe in-house is very difficult to actually develop any tools to analyze climate risk. So one alternative could just to be leveraged on third-party providers. So for example, for emissions data, there are a lot of providers out there who actually provide ESG scores or emissions measurements. And in terms of flood modeling for climate change, reinsurance brokers and reinsurers have also started working on it. So maybe you could also speak to your brokers and reinsurers to see what kind of offerings they have. And also internally, you could also look at enhancement of property data to increase the granularity, for example. On to the next one on control and mitigation. So once you've assessed the impact of the risk or measure and you identified what are the key risk drivers, then you think of how to update your strategy or policies and processes to kind of incorporate these risks. So in the example of transition risk, you could update your investment SOPs to include ESG criteria when you're assessing a counterparty before you invest. For example, also the use of the CCPT guidelines from Bank Negara. And in terms of physical risk, things to look at would be for controls and mitigation would be looking into your reinsurance arrangement, whether it's adequate, whether you need to update your pricing, whether you need to implement stricter underwriting controls for flood-prone areas, for example. So yeah, so these are examples of how you could mitigate the risk. And moving on, lastly, to reporting. This is once you've it could be based on your climate targets or scenario analysis results. We can monitor and report a set of key metrics. So transition risk would be to monitor and track portfolio emissions. So if you think that, you want to move away from carbon intensive sectors, then by right, your portfolio emissions should be on a reducing trend. And that should be monitored. And for physical risk, it's also monitoring all the occurrences of flood events and how much of your reinsurance capacity has been utilized, as well as accumulation of flood exposure. so that you know how exposed you are in the event of a flood. Also, another thing on monitoring and reporting, this is more on external developments. As I mentioned, climate change, there's a lot of new developments. Recently, there was a roadmap on energy transition announced by the Ministry of Economy. So that could also impact on the transition risk that we were speaking about. So these are the things that we need to also monitor and kind of consider in risk assessments. Yep, so maybe moving on to the next slide. Okay, so just now I was talking about qualitative assessments. Just to share an example from Allianz Group, this is also available to read in more detail in the Allianz Group Sustainability Report. So what they did was, in terms of qualitative assessment, they actually identified a very comprehensive set of climate change related risk drivers, covering all the business areas by investments, P&C, life and health operations, and also all the potential transmission channels, meaning whether it's technology, for example, electric vehicles, policies, which is on carbon reduction, litigation, human behavior, could be more demand for green products, for example, and physicals, of course, things like flood and heat waves. So what happens is that for each business area, those key drivers are assessed considering a few dimensions shown on the right. So for example, investments will be assessed by the impact on the risk driver from climate change on either the revenue, the cost, or the market value of the investee company, which in turn will impact their creditworthiness. And then, for example, for P&C and life and health, okay, so different. So P&C, you assess it by premium impact, claims impact, as well as expenses, considering also whether in the future, whether a certain segment is still insurable. It could be that maybe you insure a certain part of the country that will be constantly flooded in the future and becomes uninsurable, then you lose that part of your business, and that becomes a strategic risk that you need to consider over the longer term. So the outcome of this analysis is also a high-level indication of how relevant a risk driver is to the business. And from there, because to make all these assessments, you also speak to business experts as well as business owners in underwriting, claims, strategy, pricing. So from here, the discussions also help to drive awareness across the whole business and different functions on how climate change could impact the business, and it drives the conversation so that this doesn't only become a risk or sustainability topic. Yep, so that's on qualitative, and as I mentioned, why qualitative, in my view, is very important, and it's also because the quantitative part for now doesn't give you the full picture. Like for some things on policies that keep changing every day, you will not be able to capture that quantitatively, and because of the uncertain nature of it, models can only give you so much. So it's also a very subjective assessment on how climate change could impact your business. Maybe also moving on to my last slide in view of time. Next slide, please. Okay, so this is an example of on the risk mitigation and how to incorporate it into policies. So at Allianz Group, some of the key policies that cover ESG or climate change risk is our Allianz Standard for Reputational Risk. So this will address reputational risk issues so that we don't invest or underwrite in potential companies that potentially could expose us to reputational risk because of their business practices or because they are high carbon emitting and don't have any transition plans. So another one is on investment. The investment policy includes assessing in counterparties against an ESG score. So we also do not invest in companies who score below a certain threshold. And for those that we think are borderline, we can also engage with them to see what are their transition plans. In terms of underwriting standards, there is a focus because Allianz is a signatory to sustainable insurance principles. So there is a focus on sustainable and profitable business, and our underwriting standards includes rules to avoid undesired or excessive risk taking as well as accumulations. So for example, you could have risk appetites stating how much risk you can take in certain areas, for example. So I think I'll leave the rest of the time
Thank you,
for questions.
Cindy.
Yeah.
Basically, as you present, that remind me back to 2003 when Code of Corporate Governance be introduced to the risk management fraternity. Like in sometimes after that, when operational risk still new, being introduced, everyone, very excited, and kind of thing. But what I can see that is that a structured approach is, learning from all that implementation, a structured approach on how Allianz or your presentation had demonstrated just now is basically the thing that we need to take a deep breath and then start to look into this, because it's always involved all this complexity of qualitative and quantitative. However, if you have a good framework to move ahead, basically it will guide you in terms, the organization in terms of how to implement this. We have like, unfortunately, 3 minutes, okay, but in order for us to wrap up, so we received quite overwhelming question today. And I believe that as Louisa and Shinli basically had prepared their presentation, they also take into consideration some of the questions that we received earlier. So I think I just want to take a very quickly into not two questions, but two theme of a question, right? Because for all the questions that we receive, it can be like categorized into those that asking on in terms of how can we integrate this CRMSA into into the day-to-day activities to ensure that the approach of climate risk is comprehensive and cohesive, towards really achieving its intended outcome to mitigate the climate risk. And secondly, the question about more question about the roles. Yeah, they talk about what are those roles. If let's say risk management, typically we look into first line, second line, and third line of defense and their role, their ownership, and their accountability. So in a nutshell, these are the two questions. Maybe perhaps I pass to Shindy or Lucia. Question with regards to how to embed CRMSA into day-to-day activities, and secondly, on the roles that can be played by other three lines of defense, please.
Well, I don't mind giving some highlights, even though I think I have covered it already before extensively. So we also have on the chat, I actually provided the answers. It can be deployed after.
Okay.
How to get the first line of defense, because I think that is probably the one that is more difficult to attract, right? First line of defense really needs to embrace climate risk, understand it, and come up even with the opportunities and solutions that they would like to have in place, as well as mitigations for the risks that we highlight. Risk management there is just a facilitator and an enabler. And if we don't do this way, we don't get there.
Okay, so let me recall last time when we introduced risk management had been seen as an extra luggage, and the first line of defense are those basically people that say that we don't need this extra luggage for us to carry in addition to whatever that we do with regards to risk management. What do you say about that? How can we basically convince the first line of defense to buy this idea that it is something that we want to do? It's not just something that pushed to us to do.
Well, to me, it is very, very simple. We are in the business of taking risk, managing risk, and giving assurance that we will make profit out of it, right? And this is only possible if everybody understands that this is the sequence. First line of defense is in an organization what brings the business to the company. If they don't understand the risks, how can they be selling insurance?
Yeah, and my advice is that don't scare them with all the abbreviation and so on and so forth and technicalities. Let tell them that this is something that we already know. It's just that now we are taking a very structured and scientific approach toward addressing those issues that we already have, basically. And Shirley, how about this question about how to make this first line of defense embed it into their process? Into their day-to-day, should we come out with some kind of a SOP or framework, or this is something that each SOP and framework of the particular business line to capture the area of sustainability in their, say, SOP or manual?
I think going back to my last slide just now, how it's incorporated in the policy. So I think at Allianz Group, because it's sort of at the start you get some resistance, but after a while, for example, on the business screening, it becomes sort of second nature to our investment as well as underwriting colleagues to always check clients, especially large ones, against ESG sensitive questions and see whether they potentially could pose a risk, for example, if they don't have proper human rights practices, or even if they are very high carbon emitting. So I think over the years, it has sort of become like a second nature to these people. But also, I think it's maybe also good. That's why when we have the qualitative assessment and you get business owners to also talk about it, it sort of creates awareness on how the market is developing. So if you can see with now all the policies coming into place, even Bursa requires listed companies to disclose on emissions and all that. So there's always a demand also for more sustainable products. So it's also easy to convince them in that sense, because in the market, there's all these demand coming.
I think based on my 20 years experience in doing risk management, since first enterprise risk management being issued 2003, if I'm not mistaken, corporate governance, as a result, there's a demand for that. This time round, when sustainability come into picture, climate risk come into picture, it come in such tremendous way, in the sense that you can see a big wave coming from that you mentioned you mentioned the JC3, the Bank Negara, I mean, on the other hand, come out with the guidelines and so on and so forth. So it's kind of overwhelming. We hope that, the session that we have today or that we plan as well, we'll be able to shed some light into it. And hopefully the subject not becoming difficult as it goes, but becoming simpler as it goes, to everyone to understand that this is nothing different than what we already do. It just typically, another emerging risk, that how we address it more comprehensively. So unfortunately, because the time is not on our side, we definitely will not be able to answer all the questions. And as we mentioned previously, we are compiling from the first webinar and then this second webinar all the questions, and then we were preparing the FAQ. Hopefully, now it start to shape into something more complex than just FAQ, perhaps something to a simple reports in terms of what we basically achieve from this webinar, from the question that we have. So I believe the key takeaway from this session, the CRMSA policy document highlight on the significance, and how this speaker also highlight on the significance on the informed decision making, collaboration within the function, within the company, and more importantly, the accountability in managing the climate risk does not solely rest to certain function, but it is basically everyone, which is why we have that governance thing as being presented by Luisa. And it's also provide clue in terms of the frameworks, like Shinlin shared just now, the framework that being, the policy that being used in Allianz for an inclusive stakeholder involvement, transparent disclosure, and more importantly, coordinated approach in order to foster resilience in the face of climate change. So before we go, We wish to express our appreciation again to our esteemed speaker, Miss Lisa and Yip Shin Lee, for their valuable insight. I know 1 hour is basically not enough time, which is why we break this risk management into 2 parts. So hopefully we will cover the rest of it in the second one. So, but the valuable insight and knowledge sharing on this CRMSA is definitely something that will be beneficial for us. So do wait for the upcoming series of the MTA sustainability webinar. By end of August, there'll be a topic on risk appetite, and our final webinar on disclosure requirements sometime early September. So we hope that our webinar series will be the prelude to our sustainability conference that coming on November. So do look out from our websites and our invitation for the next series. And with that, thank you very much, Luisa. Thank you very much, Shinli, and for all the participants. Have a nice day. Assalamualaikum warahmatullahi ta'ala wabarakatuh.
Thank
Thank you very
you.
much. A real pleasure.
Thank you.
See you.